What's up, people? What's up, people? Hope all is well. Thanks for tapping back in. Kenneth here, streamhomeloan.com. Yeah, man. So just wanted to make a quick video for you guys. Tapping in on a topic that just popped up on my screen here, talking about the CPI numbers. Inflation has continued to progress downward, which is good. Obviously for the normal consumer, but also good for our market because hopefully the feds will back off of raising interest rates and we can start to see rates stabilize and maybe come down, hopefully come down. Right, so rates have trickled down just a little bit with the fact that the CPI numbers have come in lower, and there's an expectation that the feds may remain paused on raising interest rates. But my whole perspective comes from like the loan officer's perspective, right? So even though we always want to remain hopeful that interest rates are gonna, head down and put us in a more favorable market to make it a little bit easier to grab transactions out there, open up some actual refinance transactions. We can't get too caught up in that concept because we just don't know. And you don't want to be sitting back like waiting for a certain situation that may not come or may take a while to get there. So what you want to do is stay building your business so that you catch the deals that you can now, and so that the people that will potentially refinance in the future are in communication with you. You're earning that business now by keeping them informed. So what I just did earlier was I sent out an email to the whole company, to all my agents, just saying, hey, even though the market looks like it's trending in our favor, who knows if that's going to take 6 months, a year, 2 years. It may take longer. You don't know what factors can come along that will, change the direction of what you're seeing or what you're hoping for. So you really don't want to get caught up waiting for that. And you don't want to get caught up building a business around that. You'd rather build a business around, I don't want to say worst case scenario per se, but the market that we're dealing with. And you obviously want to have a certain projection going forward of what you're going to do to maintain business, even if rates adjust upward or whatever the case is. But in our industry, for a long time, we've been very aware that the smart way to grow your business and establish yourself is through building a business, a purchase business, meaning that you're working with clients that are looking to purchase homes, because traditionally, even though purchases slow down a bit when rates go up, they don't slow down as much as refinances, obviously. And purchases, the price usually trends down to offset the higher interest rate, while refinances, it's really a rate for rate comparison a lot of times. So it's always a smart thing to do that if you're really trying to establish a real business and not just kind of eat off of like a mini refinance boom or the easy transactions that may pop up during a time where the rates are very favorable. The best way to do that is making connections with realtors, establishing yourself with with potential homeowners through marketing in certain streams, whether it's on Facebook, whether it's on Instagram, but really just establishing yourself as an expert, having open communication with a pool of people, to where as they develop forward into actual real potential buyers, you're there to facilitate not only their questions up front, but their actual transaction when the time is right. Because like I was saying in this email to my clients, it's like I've lost deals from people that are actually family members just because I wasn't in front of them at the right time. And for a moment you're a little annoyed, but if you're being real, you have to understand that people will fall into a transaction, and it may not be something where they were like they were intentionally not trying to do the transaction with you, but they walked into a builder, like a new home builder, and they walked into their showroom, and the builder kind of pulled them into the process and said, hey, this is how we work, this is our lender that we use, and go ahead, get pre-approved. And they just sent them down a funnel, and they ended up moving forward with it. And that happens because maybe you weren't in front of them while they were starting this process. Maybe you didn't follow up a couple of weeks before to inform them on how it works, and then you find out that, hey, they're looking at new builds, and then in your mind it would trigger that, hey, look, they're probably going to be in contact with the builder's lender. So maybe I should inform them on how that works, and that, hey, you can go with someone outside of the lender or out of the builder, and you'll probably get a better pricing, at least compare with me, etc. Right? So I've learned my lesson the hard way by losing a couple of deals with family members and friends, where I'm just like, oh, that sucks, but I can't really expect them to always have me in mind as they're moving through their day and through their life. You know what I mean? Like, and it just happens that way. They can walk into a property where the realtor has a loan officer sitting there, and the realtor kind of funnels them to a loan officer. And the person is just kind of like caught off guard, and then they just proceed forward. If you're not in communication with them, you can't really blame them for not going with you on the transaction. So keep that in mind, because rates may continue to trend into a better place, we hope, but they may not. But either way, the only way you're going to really establish yourself and get that business when the time is right for each individual client is by being in touch with them, showing value, offering them value up front in the form of, free pre-approvals, running scenarios for a debt consolidation. If someone's considering refinancing, maybe they won't do it now because rates are higher than what they want, but maybe they understand, hey, look, that is valuable for me, and I'll come back to it when I think rates are a little bit more favorable. But at that point, you've already put your bid in, you've already showed value, and now you're in a consistent communication cycle where the person actually would feel bad for not going with you. If you don't communicate with them at all, and they don't have your direct contact, they don't have a recent communication with you via email, you haven't shared them any information or talked to them and gain credibility, they're not going to feel bad. They're going to move forward, and they're going to do what they have to do. So keep that in mind. No matter what the market does, the best thing that you can do is really establish yourself as a real estate financing professional. And that's really like on the purchase side, real estate financing professional. And then obviously same thing on the refinance side. You want to establish yourself as someone that's in tune with the market, knows what's going on, offering information, giving them value, emailing them a loan calculator, asking them if they have any debt they consider consolidating, so you can at least run a scenario for them, things like that. If you're doing that over time, leading up to their perfect scenario, which may be 6 months, a year, 2 years, whatever, you're going to be their go-to, and you're going to establish a relationship of exchanging information. And they're going to feel comfortable reaching out to you just to say, hey, what's going on with the market? And that's how you keep those customers. So speaking of that, there's a bunch of people that I need to reach out to that we haven't, I did business with them, like, let's say in the last, like a couple of years ago when rates are more attractive, and those people have kind of fallen out of the market because they're kind of trapped in that 3.5 or 3%. But even still, as a mortgage loan professional, I need to be reaching out to them saying, hey, what's going on? Do you guys need anything? Hey, look, take a look at a home equity line of credit if you guys were looking for some access to cash. Maybe later on when the market's more favorable, we can probably roll that back into a primary loan. Obviously, think about what you're saying and, consider the legalities and all that. My point in that scenario is just, I don't want to ever advise someone like, yeah, in the future we'll be able to do this. Hey, possibly in the future, if the market permits, you might be able to roll that in, just so you're presenting all the options, just so that you're well and you're informing them as best as you can. So that's all I want to say, folks. Thanks for tapping in. Like and subscribe and share with anyone that's in our industry or anyone that just wants to know a little bit more about the mortgage industry. But main point here is loan officers, keep working on connections. Doesn't matter the interest rates. If you had a 10% market, there's going to be agents in that market killing it, making good money, helping their clients out with good rates and good rates comparable to where that market is. But there's going to be people actively making money. So keep that in mind. It's just really about the connection, building the trust. You build the trust through credibility and knowledge, and sharing that information and just giving value to your clients. So tap in at streamhomeloan.com if you have interest in becoming a loan officer in our company, working independently, working remotely, kind of running your own little operation within the company. Let me know, tap in, leave a comment, leave a message. All right, have a good one. Hope all is well.